Hey, what is up guys, and welcome back to my channel. And for today's video I want to talk on a strategy that I would follow if I was starting to invest in the stock market. This is a very basic strategy and I'm pretty sure a lot of investors have followed this strategy because it's very simple. But before we get into the content, if you like the video, please hit the like button and subscribe to my channel. So what I'm talking about is investing in companies that pay dividends. Basically, for this video, I'm gonna talk about companies in the Canadian stock market, and for the next one, I'm gonna talk about companies in the US stock market. So, first of all, I picked these five companies because they pay dividends, they have a good history paying the dividend, and also they have a good history incrementing the pay of the dividend or the amount of dividend they pay to their investors. And also they are companies that are very well established in the industry, are very good companies, big companies and stuff like that. So that's why I picked these five companies. For those that don't know what a dividend is, basically it's a payment that the companies make to their investors for holding on to their shares. It's like they use some amount of their free cash flow to pay out dividends, that's why. Another thing to mention in this video is that these companies are very slow in terms of growth over time. They're not like companies like Apple and Microsoft or even Tesla, companies that grow a lot over time, from one day to another they increase their value for 2%, 5% and stuff like that. Instead, these companies are very slow in growth, but they are very good companies and I'm pretty sure over time they will be incrementing their value. So, because this strategy takes into place when investing in a long-term plan. So, the first company that I want to talk about is BCE, or better known in the Canadian market as Bell's Communication. It's a company that belongs to the telecommunications industry, a very well established company, one of the three biggest companies in the industry in the country, and this company is paying right now a dividend of 6.01%. This company has been paying its dividend since 1983 and it's been incrementing the dividend for the last 11 years. So we have a good history of dividend for this company. How did this company behave for the last 5 years? So we can see in this chart that as all companies, it had its ups and downs, but overall we can say that the trend is very clear. It has an upward trend, but after the market crash, the company was hit hard as all companies in the country. But since then it's been incrementing its value, but still it has some ground to recover, but I'm pretty sure it's going to reach levels they had before the market crashed. The second company is BMO, or Bank of Montreal. It's been paying a dividend of 5.48% and it's paying a dividend since 1829. So we have a company here that has been paying dividend for over 100 years. So what else do we want when looking for companies that pay a good dividend and has a good history track? Well, BMO is one of them. This company has been increasing the dividend for the last 8 years. Actually, it's not that much, but considering the fact that it's been over 100 years since they started paying dividends, it gives me enough confidence to put this company in my portfolio. So for the last 5 years, this company had its ups and downs. Overall, they have an upward trend after the market crashed. We know companies in the banking industry have been hit hard, especially hard because central banks in Canada had lower interest rates down to 0 and 0.25%, affecting directly the revenue they make out of every loan they make to people like you and me. So because of the same situation, the company, it has recovered some ground, but still has a long way to go. But I'm pretty sure over time it's going to reach the level they had before the market crashed back in March this year. So the next company is Canadian Utilities, a company in the utility industry. So we know we need utilities whether we are in a good economic situation or if we are experiencing an economic crisis like the one we are experiencing right now. So that's why this company is paying a dividend of 5.26%. It's been increasing the dividend for the last 48 years, consecutive years. So this is the company that has been increasing its dividend the longest in the country. There's no other company with a higher amount of consecutive years increasing the dividend, which is actually the reason why I brought this company to this video. So before the market crashed for the last 5 years, the company has been ups and downs. We see here that back in 2018 it went down a little, but then it recovered the ground it lost the previous year until the market crashed. Again, this company got hit hard, but it's been recovering ever since, and I'm pretty sure they are going to reach the level they had before the market crash back in March. So the company number 4 is Enbridge. It is a company that rents out energy infrastructure. Basically, they rent out their infrastructure to companies that transport oil across the country. It is not a company that is directly related to the gas price. That's why it is a bit safer, or even more than companies that are related to the gas price, because if the price goes down below their mark of revenue, well, actually they are going to have trouble. So this company is not directly related. This is the company that pays the highest dividend in these among the 5 companies. It's paying a dividend of 8.39%, and it's been increasing the dividend for the last 24 years. 2 good reasons to have this company in your portfolio. Before the market crashed for the last 5 years, this company has been having its ups and downs. Again, in 2017 until mid 2018, they had lost some value in the market, but since then they have recovered until the market crash in March this year. It has recovered some ground, but still has a lot of ground to recover. But I'm pretty sure this company is going to go back to normal before, or to levels they had before the market crash back in March. So the last company I want to talk about is Fortis, and another utilities company. We know utilities we use them every day, and this company, it's been increasing its dividend for the last 46 years. Yes, it is the second company that has incremented its dividend for the longest period of time after Canadian Utilities. That's why this company is in this video right now. They are paying a dividend of 3.68%, which is something good actually, but what is most important in this company is that belongs to the utilities industry and the history of incrementing dividends for 46 years. So this company is the company that has gained more value over time for the last 5 years compared to the other 4 companies. After the market crash, again it got hit hard, but it's the company that has recovered the most out of those 5 companies in this portfolio, and I'm pretty sure in medium term is going to reach levels they had before the market crash back in March. So now that we know the companies that we would like to invest, if we are starting to invest in the stock market, at least these are the companies that I would pick if that is my situation. Now I would follow a plan of investment basically. So let's suppose that I'm going to buy 1 share of every one of these companies. So the total value is going to be $262. If we average out the dividend these companies pay, we get 5.74% in dividend. This is the average. Let's suppose this is going to be our dividend for the whole year. So it means that we are going to be investing $262 at a dividend rate of 5.76%. So 1 share is not enough. Let's suppose that we want to buy 100 shares of every company, and by the end of this investment we are going to have invested $26,254. So now let's suppose that we make $30,000 of net income every single year. If we only put $400 aside and we assign these savings to the buying of these shares, by the end of 4 years and a half, so we're going to have 100 shares of each company. So if we leave our investment for 10 years, it means that by the end of the 10th year, we're going to have $45,963. So it means that over the period of 10 years, we're going to increment our investment by $20,000 by actually doing anything. The only thing that we have to do is keep having our regular job, our everyday job, and putting aside $400 every month that we are going to assign to buy some of these shares. So our goal is to buy, like I said, 100 shares of each company and reinvest the dividend payments that these companies are going to make over the year on the purchase of more shares. That's why we're going to reach our 100 shares goal by the end of 4.5 years. So obviously, if we are in a couple and we both put money to save and purchase some shares, we're going to reach this 100 share goal faster. So our goal is to keep this money for at least 10 years. Obviously, if we want to keep this money for more time, it's going to be better because it's going to multiply even more. And for instance, if you start when you are 20 years old, if you leave that money 20 years, let's say in 20 years, you are going to make $40,000 out of your initial investment by actually doing anything. So it is a good plan that I would follow if I was starting to invest in the stock market. And this is like a recommendation that I do to all of you if you are starting as well. So it's a very good plan, very basic plan. A lot of investors implement this plan as well. Those companies that pay a dividend are actually very good companies. Most of them, not all of them obviously, but a lot of them are very good companies. So this is the content that I have ready for the video, and if you like the content, please hit the like button and subscribe to my channel. And also, if you have comments, leave that information in the comment section. So thank you for watching and have a good one.